Okay, I do hope you been enjoying your studies and then finding time to rest as well. Okay, and I believe that the challenges are not weighing you down. You have to be strong. Okay, and everything will be fine. Let's move on. And don't forget, you know what I mean now. Okay, so let's just quickly look at something. As a business organization, there are various ways to raise money. Like when you need money for certain operations or certain investment or certain activity, you can take various approach from getting loans from the bank, okay, getting credit facilities, that's in terms of increasing your payables, trade payables basically. You can negotiate overdrafts. Okay, you can do various form of fundraising. You know what I mean? Okay, especially if you're in the formal sector, you do more of the formal. Like we have, when you're raising funds, you have the informal side of it to the formal side of it. Okay. All right. So maybe you can look at the various forms that suit the type of business that you're managing. Okay. That's what you call the C-level executives. Not the C guys, the chiefs. Those are the C guys. They call them C. The brand all these things. If you don't really get the jack behind it, you might be confused. The C-level executives. Those chief this, chief that, chief finance officer, chief executive officer, chief technical officer. Chief. So the C there is the level we are talking about. So the CFOs, basically, like chief finance officers, we usually want to think of the best way to raise funds when the need arises. Okay, but that's not even where we're going to. Just trying to, prepare your mind. But sometimes, as an organization, especially publicly quoted companies, you want to raise money such that people or individuals or even other organizations, okay, pay you to own a part of your business. That we call shares. Okay? So what we're saying is, you're going to say, okay, come, I want to give you part of my ownership. That you're going to own the business with me, but you're going to have to pay for it. Okay, so the idea is that you want to raise money by selling a part of your ownership. So by doing that, you're giving a share of your equity, let's use that word, okay, to individuals. So they're going to pay you for that, okay? So in this class, we want to look at how to account, let's call it accounting for what? Shares issued. Now, when you issue shares, you see, there are various approaches. So we're going to be taking them class by class. So for today, let's take the one at par. Accounting for shares issued at par. Now, the logic is that when you register your company, something called registered shares, okay? You need to take the class on shares. Go to Jado's Consulting. There's already a class on shares. Take your class on shares. Take your class on companies. You understand what I'm saying? There's something called registered shares. Okay, so when you register your company, there's a unit of share that you normally register your company with. And then, each unit has a registered price. So if, for instance, you registered 10 million shares, okay, you can call this registered shares, or sometimes you refer to it as nominal share, okay? Now, if you register 10,000 shares, each of the share will have a price or a value. So let's say 10,000 shares at, let's say 1 naira each, for instance. Okay? So this is 10 million though. Okay, so let's say 10 million shares at 1 naira each. I'm used to putting the 3 zeros up there, but I hope you understand what I'm saying. So this is 10 million shares at 1 naira each, okay? So that means you have 10 million registered shares in value. Now, that's what we call authorized sometimes. Well, it is possible that, out of this 10 million, which is authorized or registered, you want to say, okay, I want to give out 1 million. So what it means is that you're inviting the public to come and what? Pay for 1 million out of this 10 million. Okay? Now, you see, this 1 naira which is registered is called the registered share per unit, okay? So if you're calling the public to come and buy 1 million shares, you would want to issue either at par. At par means that you're telling them to pay exactly the registered value. So it means you're telling them come and pay 1 naira per share for 1 million shares, for instance. But for some reasons, okay, if when the business has already been in operation, and then there's a value. Instead of telling them to pay 1 naira, you can tell them to pay 1 naira 20 kobo. So in this case, you are issuing the share above the registered value. So this one is called premium. This 20 kobo is called what? Premium. Okay. Now, for some reasons too, of course, that has some legal procedures. You might want to issue below 1 naira each. So maybe you can tell them to pay 80 kobo. But in this case, it is called what? Discount. So it means that you can issue your shares either at par, at premium, or at what? Discount. Now, if you're using any of this, based on the scenario, the accounting approach will differ. So we're taking them one after the other, okay? So today, we're accounting for shares issued at what? Par. That means you issued the share at exactly the nominal value per share, or the registered value per share. So that's what we're taking today. The next class will take premium, and then maybe the following one will take what? Discount. Okay? Now I've explained what we mean by what? Shares issued at par, shares issued at premium, or shares issued at what? Discount. Okay? Now, in issuing the share, when you're calling the public to come and what? Buy shares in your company, it is possible to have what they call Oversubscription. Oversubscription means that the number of units that was applied for is more than what has been issued. So if you're issuing 1 million and then you got application for 1.5 million units, that's oversubscribed. Now it is possible that you have less. You issued 1 million, let's say you have 800,000 units applied for. That one is what? Under subscription, okay? Now, when you invite them, now there are methods of collecting the money from them. You can collect the money in full. That means as they are applying, they are paying in full. If you apply for 1,000 units, you pay the full amount. If you apply for 2,000 units, you pay the full amount. So if I'm issuing at par, for instance, so I issued 1 million shares at 1 naira each, it means that anybody that applies will pay immediately. So if you apply for 1,000 units, so you do your 1,000 times 1 naira, that's 1,000, you pay immediately. Okay, that's payment in what? Full. But for some reasons, the company can decide to collect the money instrumental. In recent times, usually they collect money in full these days. But let's give you the possible scenarios. It's possible that the company does not want to use or does not need the money at once. So they put up a process that enables them to collect the money instrumentally. So upon application, you pay a particular amount. Okay, upon allotment, usually goes with application, you pay a particular amount. Then they will now call you gradually to pay the remaining amount. So if, for instance, I have 1 million shares issued at 1 naira each, okay, upon application, I can tell you to pay 20 kobo. So it means that you are owing me 80 kobo. So I'll be calling you gradually to pay. Okay, so I call you the first time, I say pay 30. It means it's remaining 60. I can call you the second time and tell you pay another 30. It means remaining another 30. So I'll keep calling you when I need the money until I finish collecting all the money. Okay, that will call payment by installment. Okay. So there are two methods of collecting your money when you issue shares or when you tell people to come and buy into your company. Okay, so you can get the money in full or you get the money instrumentally. Okay, but practically in recent times, when they issue shares, they want to collect money in full. Okay, so we're going to put our attention on getting the money in full. Okay, although the series is quite long, so if time permits, we'll also take the instrumental part. But here, let's concentrate on what? Taking the money in full. So it means that once the payment is made, so once shares are issued and applications are received, we get the money in full. Okay? And then for today, we're looking at what? Accounting for shares issued at what? Par. At par, and the money is what? Received in full. What I'm saying is that if the company is inviting you to come and buy their shares, as you are applying, you're paying for everything. Okay? No instrumental collection. All right? So this is a summary of how it looks like. Okay, you're telling them, come and pay money to what? Own part of my company. That's issue of shares. Okay, and then I'm telling them, as you are applying for the number of shares that you want, you're paying in the last payment what? On application in full. And I told you, you can have shares issued at par, which means that you're issuing it at the price that is being registered or at the nominal value or the nominal price. Okay, but you can as well issue be above the what? The registered price, which is called at premium, or you can issue below, which is called at discount. But for this class, we're taking at par. So it means that the shares are issued at exactly the registered what? Value. So subsequent class will take premium, then we'll take discount. Okay, and then we'll look at over subscription, under subscription. Okay, and then possibly we'll look at what? Instrumental payment. But let's concentrate on the full payment now, and then we'll move from there. If you have questions, you can reach me on the numbers displayed. I'm going to reply you with the right answers. All right, let's take this very simple question so you get an idea of what we're talking about. Remember that capital is capital, no matter how you look at it. Okay, remember I told you you have the activity summarized into either assets, liabilities, income, or expense. You're raising money, depending on the arrangement around the money you're raising. If it is share capital you're raising, it means capital. And capital, remember, it's liability credit. Okay? So you're receiving money for it, you're debiting your bank, crediting the capital. Okay? And then remember, we have other form of, um, obligations. So if you don't want to use, can use debentures. That's another way of raising money. But in this case, the arrangement for shares is different from the arrangement for debentures. Okay? Remember, your shares are in classes. You can be issuing ordinary shares, you can be issuing preference shares, depending on what suits the purpose or the objective of the fund that you are raising. But in this case, we're looking at ordinary shares. Okay? Shares that makes you an owner. So it means that there's no preferential treatment in that sense. So most times you depend on profit, to get dividends. Okay? So that's the arrangement we're looking at here. So as time goes on, we'll also look at preference shares as well. But let's concentrate on what? On ordinary shares. Okay, so this question is a brief one. We have the following represent the balance sheet. Of course, you know that balance sheet in this sense here is called statement of financial position. Okay, the following represent the balance sheet of Strong Nigeria Limited. Okay, so we have statement of financial position as at 31st December 2010. So we have non-current assets, current asset excluding bank, then we have bank. So we have the total asset, the finance by liability, the short-term liabilities, reserves, and then we have authorized share capital, 4 million ordinary shares of 1 naira each. Then we have ordinary share of 2 million. So it means that out of the 4 million authorized, they have already issued 2 million. So we have like 2 million left there. So they're now saying that on the 1st January 2011, 1 million ordinary shares were issued at 1 naira per share. That's at par. That means issued at the registered or authorized or nominal share per price, nominal value per share. Excuse me. Now they said all shares were subscribed for, and the payments made in full on application as at 30th March 2011. Show the necessary entries to record the shares issued. So, what are we saying? Let's make it. This is a very simple one anyway. I expect you to already at this point. I told you that your double entry is very, 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 very key. So you should be able to use that properly. So we have strong thing. Nigeria Limited. Okay, so they've given us the balance sheet. Then say 1 million shares were issued. Okay, so what happened? They now said that all shares are subscribed for and the payments made in full. So that means there was a full subscription and then the payments were made in full on application. So as they applied, they'll pay. If I'm issuing 1 million shares at 1 naira per share, how much am I expecting? That's 1 million times 1 naira. So that means I'm expecting 1 million naira. So what does that mean? It means that as they come, they give me money, or they pay into my bank account for a particular unit of share. So if money enters my bank account, I've received money. My assets, which is bank, will increase. So it means that those guys become, some sort of creditor that is expecting shares from the business. So what happens? So we say bank, right? The bank has a debit there of 1 million naira, because you're issuing 1 million shares at 1 naira each. So 1 million times 1 naira, that's 1 million naira, right? So we have the bank here debited with 1 naira, 1 million. No matter double entry, you should, at this level, I shouldn't be telling you all this. So if you have issues with double entry, go to jarosconsulting.com and take the class. So now we have 1 million debited. Then there's application, of course. People have applied. Those that applied, okay, we can hold them with application monies, okay? So that will be a credit of what? 1 million. So they paid 1 million naira to apply for 1 million shares, right? Now, the question is, what are they applying for? They're applying for what? Ordinary share capital, abi? So they are trying to get to have a unit or a stake in our business. So they've paid 1 million to our bank account, they've applied. So they're applying for ordinary shares. So that means this money moves to the ordinary share capital. So what do? We debit this application. We debit this guy. So the money goes out of there, right? And then goes to where? Our what? Ordinary share capital. How much? 1 million. Okay? So how do we show this in our normal double entry? So let's start with one. Bank. So we have our bank account here. How much do we have in the bank before we issue the share? You go to your balance sheet. I see 300,000. So we have balance brought forward. How much is that? 200,000. Now, the applicants paid 1 million. So money will come in, right? So we have application money. How much? 1 million. So if we had 300,000 in the bank account, we issued a share, told them to pay 1 naira per share. We issued 1 money. Everybody applied. They paid 1 million naira. That means the money we have in bank account will increase by 1 million naira, right? So we now have a new balance, which is balance carried down to be what? 1,300,000, right? So there's a new balance. Balance brought down to be what? 1,300,000, right? The next one is what? Application. So what do we have? We have application account. That's those that applied, right? We debit bank, we credit application, right? So that means here we're going to say bank. How much? 1 million, right? So applicants have paid 1 million for 1 million shares of what? Ordinary share capital. So the money goes out of application to our what? Ordinary share account. That's share capital account. So we say what? Ordinary share. So this closes this account, right? Then we open ordinary share capital account, right? So what was the ordinary share that we had before? 2 million. So we have balance brought forward. How much? 2 million. Then the new one, which is 1 million, we increase the share to 3 million, right? So we say what? Application. How much? 1 million. So this becomes what? 3 million. So there's a new value or new balance for ordinary share. So we have balance carried down. How much? 3 million. So we now have a new balance. Balance brought down. How much? 3 million. So we have accounted for the shares issued for, okay, paid for in full at par. So money came to the bank of the business for ordinary share capital through what? New applicants. So now we've done this. Remember, there was a balance sheet before we issued the share. So then there's going to be a new balance sheet, right? So let's prepare the new balance sheet now. So we'll say what? Statement of what? Financial position as at when the share issue was concluded, which 30th March 2011. Okay. So what do we have there? Non-current assets. So we have non-current assets. Of course, at this level, we know what non-current assets are. So what the question said? 3838,000. So we have 3838, right? The next one, current asset excluding bank. So we have current what? Assets excluding what? Bank. What do we have there? 550,000. Then we now have bank, right? Bank will change because there's a new value for bank. So 1,300,000. All right. So what do we have here as the value? Let's add up. So what do we have? So we have 3838,000 plus 550,000 plus 1,300,000. So I have 5,688,000. 5,688,000. Okay. Then what's the next one there? So I think that's about total asset there. 5,688,000. Okay. So these are our total assets. Let's call this assets. So what's the next one? Let's go to our liabilities now. So what are the liabilities in the question? Short-term liabilities. What do we have there? 950,000. Reserves. What's our reserve? Our reserve there, 1,738,000. 1,738,000, right? So what do we have when you add? Okay, 950,000 plus 1,738,000. I have 2,688,000, right? So you know as our what? Our ordinary share capital now. Ordinary share capital has changed. It's no longer 2 million according to the question. You know, we had 2 million, but we issued another 1 million. So that means that increased to 3 million. That would what? 3 million. So when you add, we have 5,688,000. So this is the suggestion in terms of accounting for shares issued at par with payment made in full. Okay, so if you have questions, you can reach me on the number displayed. I'm going to reply with the right answers. And don't forget, it's a series. we're going to look at, premium in the following class. And then remember, we're taking cash support. So you can pay into the accounts displayed. And then you can sponsor copies of my textbook. Okay? We distribute to students for free. And then you can as well order for yourself. 7,000 naira per copy. Okay? So if you have questions, you can reach me on the numbers displayed. I'll be able to reply with the right answers. Thank you.